All right, it's James here with James and the Giant Economy. Today we're going to talk about where the market's at, but more importantly, where it's headed. And I'm going to ask some hard questions. So hopefully stick along to the end because in the end I'm going to tell you what I'm doing to further progress my wealth and just to kind of keep in this nice kind of semi-retired phase. What do I mean that? As in, I don't have to work. I've got enough money coming in where I can keep my lifestyle. I can do kind of what I want and not have to go to that 9 to 5. So I wish that for you too. It is a very nice place to be at, but if you're interested in how I got here and everything, just look me up. We'll talk offline and everything. But what's happening in the market? So, today the market was up. I was very surprised about that. And I think in this current market, people are everywhere. People are everywhere, right? You talk to a real estate guru, they're like, it's amazing, you should get into it all day long. It only goes up. You talk to a crypto guy, they're like, hey, it's the future, just invest, invest, invest. You talk to a stocks guy, like, oh yeah, it's a buy the dip, buy the dip, buy the dip type thing. You talk to oil and gas people. They're basically, I mean, some of them are pretty upfront with you. What I've found is that they're like, yeah, this is a good ride for now. So ride it while it can, and then get off that train before it stops. So yeah, and I might have missed some sectors and such, but where this is where we're at, right? Everybody, if you made your heyday in the sand somewhere, for the majority of people out there that I've talked to, that is it. This is the one commodity they need. This is the one area of business they need. Nothing else to compare, right? And so, what I've found from that is that a lot of these people that are still in that mindset, that are still doing real estate, they're still doing crypto and everything, what they're doing is they're ignoring the fundamentals that got them to there to chase new and more deals, right? They always got to be doing, I can't let my cash sit, all these things. They could say cash is trash, but it's funny, Ray Dalio just switched on that. So I should make a video on how cash is not trash. Comment if you're interested in that. But people they're ignoring the fundamentals. They're ignoring the rules that they set up in certain areas, in certain areas of their expertise. What am I trying to say? Asset classes, thank you. Certain asset classes that have gotten them to where they are. And what happens, the real fundamentals that you do, that you break, that is the main principles. You take on more risk, right? And I was talking to a lender today, and this is great. I should have started with that, but I was talking to a lender today, and he's a home mortgage lender. He's the one, like, when you need a loan to buy a house, you call him up, and he sets you up. And he said today, he called me, he's like, man, my business has just come to a solid halt. And, it's September, October, is kind of the time when real estate goes down a bit, but there was something in his voice and what he was talking about where he was like, man, I gotta figure something out. It was scary to him in a sense, or not something that he's seen. And he's been in lending for almost as long as I've been alive, type thing. He graduated in the 70s. Let's put it that way. But he's been doing it for quite some time. Has a lot of experience, and so for someone with that experience, with that expertise, to say that and to say, there's a little bit of worry in him because he was looking for other places to put his cash and put some money, and what to do with it. He was looking for advice. That was very enlightening to me. And so I just want to kind of go through a little bit of what I went through with him in this video. I'm going to do kind of a general synopsis. If you want me to connect online, I'll go over with you. But here's what I see. I see people ignoring the fundamentals, chasing deals to get more, right? They don't know how to push the pause button, okay? And there are times in investment cycles where you want to hit the pause button. If not, you're going to get wrecked. There's times in investment cycles you hit the sell button, right? I mean, it's just these are cycles. This is what happens, right? And so I told him I asked him, one of the questions I asked him is exactly what he said. Where do you think we're at in the cycle, right? Do you think we're at the bottom to where you buy now and only goes up? Do you think we're on our way up? Do you think we're at the not the trough, but at the crest, right, where we're about to go down, or do you think we're on our way down? And he's like, oh, that's a good question, right? And so I think that told him enough. And he said, well, what do you think is going to happen, right? And I echoed what older, wiser men and women that I've been listening to, people with gray hair that have been through more cycles than I've seen in my lifetime, and what they're saying. And what they're saying is that real estate most likely, depending on what the Fed does, um, has hit its top, right? It topped off late 2021, early 2022, right? Which, by the way, I sold my houses then. Okay. It topped then. Depending on what the Fed does, is it will go down depending on how fast and what they do, right? Because the Fed controls everything. They're the ones that control rates, which controls housing purchases, which is where we're in right now. They're raising rates, and I believe the Fed is going to definitely push the housing market down lower, right? Because they said they want housing prices down. So I believe that. I believe the stock market's headed on its way down too. It's already down by like 30% as a whole right now. I mean, even look at like great companies like Tesla, it's down 40-50%. You know, it's got earnings on Wednesday, so we'll see what happens. But you look at crypto's down like 60-70%. It's rough. And even the pros are saying, hey, Bitcoin could go back to 3,500. You know, all the big crypto guys I know are saying, hey, they're going to start to nibble at 18,000, and then they're going to start to buy in around 9,000. Okay, it hit 60,000 twice the last year. That's a lot of downside. So I think we're heading down. We're not there yet. We're at this top crest, right, where the market goes. It's a recession, depression, comes up, and then it starts to crest, and we're on our way down. I think we're hitting that crest yet, right? And the next 6 months will tell us if how deep we're going to go, maybe 9 or 12. And in that, we don't know if it's going to be a drop-off cliff recession or a shallow, long recession, right? I've heard that it may be this, everything goes down 10 to 15% a year for the next 4 years, right? That's like 60%. That's like 40 to 60% total, but over the span of 4 years. Normally, when we see recessions, it just falls off a cliff, like the car hits the wall eventually, and it just stops. And in a few months, it takes a huge haircut, right? A little money slushing the system, and the Fed's starting to pull some of it out. That could lower, or that could slow it down. And so it could be what they call a salad bowl recession, where it's got a very long way down. You hit a bottom, it's a very long, slow way up. We'll see. Only time will tell what's going to happen, right? But regardless, when the Federal Reserve says, hey, we want housing prices down, we want stock prices down, we want unemployment up, they're going to push to make that happen, right? They don't fight the Fed. There's a lot of truth to that. That helped out a lot of people in 2020, 2021. But those same people are saying, oh, no. It's only up from here. It's like, no. And the hardest part about this is that most of the people out there will ignore this. They'll say, James, you're full of, you're fear-mongering, you're all this stuff, right? And, you know, people were saying this in 2020, and they were right, but they were early. And it's better to get out 2 years too early than 2 weeks too late. Okay. So most people will see this video and just go on, and I'm very scared that they're going to get caught in a trap, right? They're going to get the rug pulled out from them. They're going to have their net value go down quite a bit, and probably lose their job and not have anything to live off of. And then they're going to start selling. This is how we say it. They're going to start, well, I'll get to that later, but they're going to start selling their assets. And I'll give you a way to remember that later. But I don't want that to be you. I don't want the people that listen to me, that follow me, that I communicate with. I actually want to get a team together of people who we can invest with each other and roll ideas and deals through each other. Because if you've ever been investing for any amount of time, you know the biggest thing that you run into when you have great investments is loss of liquidity, right? You're like all my money's out. I need partners to help, you know, find money. Or sometimes you'll have this influx of money in. And you're like, where am I gonna put it, right? So that's the community I kind of want to bring together and help form, and that's why I do these videos. But I want you to be informed. Regardless, I just want you to be informed that I think we're going to go through. I think it's time for a recession. We've had 12 years of straight up prosperity, and I think it's going to go down. Now, there was another YouTuber that I really enjoy his commentaries and everything. He's an accountant. He's got a monotone voice, but he gives great commentary and information. And he put it brilliantly. And he said the Federal Reserve is stuck between hyperinflation and a depression, right? So which way are we going to go? And what does he mean by that? Is that the Federal Reserve is stuck in a place to where to fight inflation it has to raise interest rates. If it raises them too high, too fast, for too long, it will cause worse than a recession, okay? It will cause maybe a depression, but a really bad recession at the latest, right? But if it doesn't, it's going to go into hyperinflation, right? Things you think houses are expensive now, just you wait. And I think both of those are true, but here's the order, okay? And this just depends on what the Fed does. So the crux of this argument, where you're going to place your chips in this economic bet is, do you think we're going to go through a recession, depression first? Or do you think we're just going to keep going, or we're going to flatline and then go into hyperinflation? That's where the chips lie. There is not much in between, okay? I'm on the camp that, I'm of the camp that we're going to go into a recession. The Fed will force a recession because they need credibility. Jerome Powell he's doing what he says he's going to do. Like, he's not pulling the wool over anybody's eyes. He's not Volckering anybody, as they call it, right? Look at Paul Volcker if you need a reference point. But he's not doing any of that. He's saying, hey, we're going to raise it this much. This is what we're going to do. We're going to have another meeting. We're going to raise it this much. This is what we're going to do. And they do it. You know, he's not pulling the wool over anybody's eyes. There's several reasons could be for that. But my point is this, is that as long as you listen to what the Fed's doing, you kind of know the path from there, right? To fight inflation, you have to get the Fed funds rate above what the inflation rate is, equal to or above. So right now, or by the end of the year, I think it's by the end of the year, the Fed will supposedly raise the Fed funds rate, which is what we base all of our interest rates off of, at like 4.25%, right? And that interest rate is what banks use they tack on a few points and they give us interest, right? They loan to us. So when it was really at zero these last few years, we got mortgages at like 2.5%, 3%. Yeah. Well, when the Fed funds is at 4%, we'll probably get mortgages at 8, maybe 8.5. If they say inflation's at 8 or 9%, right, and they're at 4%, they're going to have to raise those Fed fund rates to 8%, maybe up to 10%, right? Which means for us like 15 to 20% interest rates for homes. This is exactly what our parents, if you're my age, what our parents saw in the 70s and 80s, right? They saw interest rates for homes at like 20%. Now, granted, the home was $30,000, which is, we pay more. There's a lot of people that pay more in their taxes than that right now, but that's what they saw, right? And that's what raising rates is supposed to do. It's supposed to push down the price of everything else and lower it, right? So that we can go into, or so that things can become more affordable, okay? So what I think is I think the Fed's going to do that. And what's going to happen is as they ratchet it up, inflation is going to start to come down and then just crash, right? And the economy is going to crash. And the Fed, a few months later, will go, oh, we solved it. We can lower interest rates now. And they're going to pull interest rates back down. And by then, the damage will be done, and you'll have the best deals of your life. And it's important for you to pick those up, because once the Fed lowers rates back down to zero, right, or maybe 2% or whatever, investors, people with money and they're in the know are going to start buying it. They're going to have the best deals of their life right there, and then just going to go straight up from there. In a period of 5 years, we may see housing prices double from what they're at, maybe more. Who knows what's going to happen, But I don't know if that seesaw is going to take 12 months or 48. That is the guess, right? And we'll see that. We'll figure it out in the next 6 to 12 months, okay? The other camp that I said seems that the Fed will get shy. That here's inflation, right? And they're going to raise it to 4.25, and they raise it to 5, and then it's going to start to break the economy. And the Fed's go, oh, we can't do that, and they get scared, and they're going to lower it, and then inflation is just going to fly through the roof, right? So that is where you have to place your bets. Which camp are you in? All right. And this is going to be a part 2 series because that's a great place to end part 1. Right now, I want you to choose just think about it. Do some research. Which camp are you in? Do you think the Fed is going to create a hyperinflation environment, or do you think they're going to cause a recession, and then it will eventually go back into hyperinflation? Which do you think it's going to be? What are the positives of each? Or not the positives, but what do you think it's going to be? What are the consequences of each? And more importantly, how is each going to affect you? So we're going to get to that in part 2.